the shutdown rolls on, the trade war rolls on. The Russell is still having its best week since 2024. It's up 5%. We're watching that. It is the largest decliner. Gold, another record high. That's like a broken record, obviously. But Josh, even with this volatility back, it doesn't feel to me as though people are really changing their big picture view. Goldman's Tony Pasquarello today, whom I love to quote, says this remains one of the most dynamic market environments I've ever seen, looks at the banks as a litmus test on many of the big questions that exist, and says, quote, I thought the takeaways from Q3 earnings were very encouraging. And what that does for me is it underscores why people remain bullish, because earnings and the expectations that they are, in fact, even though they've just started, they're going to be encouraging. What do you think?
Yeah, I think that's a really important point that Tony makes and that you raise, and it's a good place to start because when you actually listen to the calls, and I couldn't do all of them this quarter, but I listened to the big ones, it's not as though the banks are telling us they're gangbusters in everything related to AI and capital markets and everything else is moribund. It's the opposite. They're seeing opportunity in every segment of the economy. It's not to say that there aren't problems. There's always problems. But the big picture, according to the banks, is that the consumer, the quote-unquote resilient consumer, that whole idea, nothing that transpired during the course of last quarter and nothing they're seeing on a forward-looking basis tells you that that is changing at all. And that, I think, speaks to just broad strength across the board. And you don't even really have a housing thing going yet. And housing is 20% of GDP. So if that part kicks in as rates very slowly come down, the 10-year moderates, mortgage rates come down further, if you get that 20% of the economy back into a higher gear, combined with how well everything else is going, I don't see why you'd want to make huge changes. One thing I want to call out here, because we're in earnings season, we all know how important technology company earnings are to the S&P, to the outlook, to sentiment, to multiple, et cetera, et cetera. The tech sector actually has estimates being raised since the start of this earnings season. So as recently as June, the street was looking for 15.9% year-over-year earnings growth for this quarter, and now they're at 20.9%. And that's not in a long period of time. I think they're looking at all these deals being announced, and they're figuring out, oh, this is more revenue for Microsoft. This is more revenue for NVIDIA. And they've had to take those numbers up. And by the way, they've taken Apple's numbers up as well. We don't have those reports right now. We'll get them very soon. But if you've got the financials reporting blockbuster quarters, which is what they've done, and now you get technology companies as the follow-through, why would you look at this market and say, you know what, I want to make a hard pivot and do something totally different than what's working? No one's going to do that.
Right, Kerry, because, you know, people view what's happening with China and the shutdown as noise. They're both going to get figured out. Interest rates have been coming down. That's, you know, been positive for things like the Russell. Fed talked about the balance sheet and ending the runoff in coming months. The market took a little bit of a move higher on that. Is this a stay the course, keep your eye on the ball, avoid the noise market still?
Yeah, Scott, I think that's a good way to look at it. We've got earnings that are going to be reasonably strong. When Josh talks about what the banks are saying, I'd like to point out something that I also consider a real positive. We have had very little IPO activity until this year. We've had deals coming through. There have been acquisitions in healthcare and technology, in security and software. There have been a number of companies that look to be filing their IPOs soon. I think that's going to continue through the year. And as we know, we've had a massive amount of share purchasing over the last several years. So just bringing in more new companies is very positive. If the trade talks calm down or be resolved, which is what we've seen in the past, history is repeating itself over and over with the president and threats and negotiations with the situation in the Middle East resolving to a large extent. I think that the only problem people have with the market is level of valuations and concern about what's happening with AI. And I'm not as worried about that right now as some people are. So as earnings come through, I think that we can see the market hanging in here, not being too troubled, and hopefully we'll get some very strong numbers at the end of this month.
Even those who, Malcolm, are troubled, if you want to use that, with the multiple. It's not, for the conversations that I've been having of late, and some of them have been with, very important money managers, it's not derailing their overall view. And they'll say, well, okay, yeah, stocks are a little expensive. It's not like there's a lot that's necessarily cheap. But the NASDAQ today, like the multiple of the NASDAQ at its peak back in, early 2000, I don't know what it was off the top of my head, but it wasn't even close to what it is now.
Yeah.
So there's, in that view, and like the Paul Tudor Jones perspective, you might not love the multiple, but there's a lot of potential runway ahead before you even get close to what they would consider to be crazy town.
Well, I think the big bank CEOs take a cue from Jamie Dimon and try and give us a little bit of telling us to curb our enthusiasm a little bit whenever they deliver these big numbers, especially in record-breaking quarters like we just got done having, right? But I heard the CFO of JP Morgan say this is the busiest summer I've ever had with respect to deal making in M&A, right? And you guys were just talking about the big banks and the impact that that's had on the rest of the markets. We've had more than 150 IPOs through September so far this year, another 50 or so slated to happen this year. That alone tells you where the appetite and the risk sentiment is for the rest of the market. Everything else, to your point, Scott, is just noise. So investors have been able to look past the shutdown, the tariffs, the everything else, and say, this is a market I still want to be long. It's not a place I want to be looking to get out.